Everyone put 5 if you can hear me. I want to know the state of the network if it's better now. I really don't know why it was. Yeah, so it's good. So this should be good. So two strategies I'm going to show you guys, right, is the AMD concept and they call it the what's that name again? Let me 15-minute drum. Okay. Opening drum, market opening drum. Where is my Chrome? It's a market opening strategy. Very, very, where is my Chrome? I think I have so many screens on. Something is really happening with it. I don't know if it is Chrome or YouTube normally uses crypto. What? HST. Have they changed? You cannot visit YouTube right now because the website uses HSTS. What is happening? I don't know. Something has been happening in the course of today. That's a little bit off. If I'm trying to use Google is refusing me, saying security. I don't know if any one of you have experienced, you're experiencing that. And it's I don't know if it's from my end or but I'm just going to proceed. So let's look at this. So this is the first one is the AMD, and both of them are quite relative. No, not relative. They operate on opening of the market. Okay, so we majorly start the market at 9 a.m. London session, Nigerian time. Okay, 9 a.m. London session. Then overlap is 8 a.m. to 9 a.m. So there's something significant about the opening of a session. So we have 3 major sessions in the market. It's actually 4, but Tokyo and Sydney is actually called the Asian session. So the Asian session combines both Tokyo and Sydney sessions. So there are 4 sessions in the market, and they also operate on a timeline. So 9 a.m. to 4 p.m. Is London session. And now there's an overlap into New York around 12 to 1. So 1 a.m. to 9 p.m. is New York session. So then 12 a.m. to 8 a.m. okay is Sydney session. You guys got it, but I got it. Okay. So there's actually a strategy in your indicator that can help you understand, that can help you know market opening and market closing, different sessions. But what the strategy is about, it's called the AMD. It's a concept that shows what the market normally do. So when market is moving on the sideways, okay, the market is ranging. Okay, and when market is ranging, this is actually what we call consolidation in the market. Okay, so most of the time, the Asian sessions are known for market consolidating because there is no volume. There's not enough volume or competing volume. There's no momentum in the market. When there is less volume in the market, there's what? Less momentum in the market. Hence, volume is accumulated. Okay, so the major big movers are not involved. So all of the small movers volume are accumulated within a spot. So liquidity is created. Okay, and what happens when momentum comes in, volume comes in, they come to take away this liquidity and drive the market. So we have the accumulation, all right? We now have the manipulation, because if main people come in, the first one to manipulate, deceive, all right? A manipulation of volume always, or most of the time, happens before we have the expansion period. So whenever the market has a breakout, okay, and comes back down, so this is what we call what? Demand. So this is a demand layer of the market. This is a supply layer of the market, of that liquidity. So whenever a market have this form structure, this is what we call what? A manipulation. So we have the accumulation. Okay, manipulation. Then we have the expansion phase, which is distribution. So what that happens is whenever market comes back, break, this is expanded. So there happens to be a strategy of expansion, which is why I'm showing you guys this, this unique strategy. All right. So this is actually the distribution phase. You guys got it. So manipulation, accumulation, manipulation, and distribution. If you guys got it, type it on the chat. I just want you to know you guys got it. It's a very simple strategy, easy to spot in the market, but every strategy has to do with your personality. Okay, how much you can track it. It could be used for smaller time frames. It's used for easy trading. Actually, spot it. Just like every strategy, it has a checklist. So there's an activity. So before every expansion, most of the time, there happens to be an accumulation. Now, sometimes it may not be a manipulation, which now brings us back to our normal strategy, which is what? Price action. Whenever market accumulates, you want to wait for a break of structure and a retest of structure, which I taught you guys on Monday. If you did not pay attention to the Monday training, you'll be missing out a lot on the journey. Okay, I taught you guys a different approach to trading. And, when this happens, so you want to be able to spot the difference. A manipulation, okay, that leads to expansion, that takes away the previous flaw of that manipulation, you want to wait out for what? Our distribution phase. So after the manipulation, there's going to be a momentum that will take out the flaw of a previous what? Manipulation. When that happens, you just look out for what? A retracement. You look for what I call a fair value gap. Okay, because for every impulsive candle, there's going to be a gap. Okay, so there's a fair value gap. And also you want to look out for what? Liquidity that was resting on this area that's been taken out. So these are the areas you want to look for. So there may be a possible entry here. Okay, there may be a possible, and there's no entry here. The possible entries are around this zone. So what I'm just going to do over the next couple of days, or in this session, I'm going to show you one active strat. So there are strategies that are built within this concept. So this is almost a concept in the market. Okay, and the moment you start paying attention to this concept, it's going to begin to offer you opportunities of intraday. But this is what I want to show you guys today. Most of the time, the Asian sessions accumulate. Okay, because why? There's less volume in the market. It tends to accumulate on the Asian session. So what you do is when you see the Asian session accumulate, you want to wait for most of the time, the London session manipulates first before it what? Distribute or expands. All right. And what you just do is you wait for the moment the market expands and takes away the manipulation phase. So this is the manipulation phase, but this is a accumulation phase. The moment it expands and it takes away, it could be the opposite. What I'm doing right now, it could be the opposite. But I'm just using the manipulation on, all right, the supply side. Okay. So when this happens and it takes away this, you're looking for a sell and where to enter. Okay, that's a strategy, but let me show you the concept first. So what I just said is this. Okay, so you want to mark out what happened on the Asian session. So I'm on a 15-minute candle. Most of the time, it's good to look at this market. So you watch out for accumulation, and I'm just using Asian. It doesn't have to be Asian, but the strategy rests around the sessions. So if you find it around the session, you're going to be more accurate. But sometimes it's outside of the session. Like I'll show you this right now. They're looking at this market right now. You saw what? What's this? So this is an accumulation, and it accumulated into the Asian session. But this wasn't Asian. Okay, so this is actually the Asian session because it's from. So this is London. This is around New York. Okay. I didn't know why I didn't add the New York session. So I only took Asian, London, and I think somewhere around here is the New York session to somewhere around here. This is yeah. So, but this is Asian session. Now we're looking at this timeline. This is 6, still Asian session, but look at what happened. It manipulated. So what's happening right now is market is expanding. So somewhere around here, okay, so outside of whether Asian session accumulates or London session manipulates, but right about now, Asian session has manipulated. London session is expanding. So the next phase of the market is going to be what? Typically, it's going to be what? Distribution. So how do you get distribution? You want to watch out for the candles, just like it could be. Now, I told you strategically, technically, there is something here. This is an area. So I'm going to be giving you guys different ways to get in, but this is distribution. Next phase, you should be expecting a distribution. Okay. One of the ways to find distribution is to look for a fair value gap within the expansion. So there is a fair value gap here. So that's one checklist you should look out for, a fair value gap. All right. Another is a previous ceiling. So there's a ceiling liquidity is resting on, just like I told you guys on technical. Okay. So now look at this market. It means the combination of a ceiling and a fair value gap gives you an advantage here. It means if the market is coming somewhere around here, okay, that may activate the distribution. Okay. And all you do is put the market on the Asian low. So the thing about the strategy is this is now the Asian low. So this didn't really go align. I'm just using this because I'm training, I'm teaching. But this didn't really align with the phases. So accumulation phase on Tokyo, manipulation phase on London, okay, and London leads to what? Distribution, which happens in New York. So most of the time, it is London that manipulates. So which means normally, okay, it's London. This is London session. This is the candle that is manipulating. This is the move that is manipulating. But it now happens to be Tokyo that what manipulated, because that is what it's looking like right now. But for the benefit of maybe other timeline, let's look at what I am saying. So this is London, okay? So this is Tokyo. Tokyo had what we call a consolidation. This is what I do, and this is what you guys are going to be doing. I'm just showing you guys the concept, and I'm trying to put it in a phase, but it doesn't really stay in a phase. It could be used independent of a phase. Whenever a market, all right, accumulates, okay, you want to look for expansion. So this is actually an accumulation. All right. But what this market did, it just played price action, broke, retested. There was no manipulation. So this played out and moved. So this didn't give us a manipulation. Most of the time, it doesn't. All right. Some of the time, it doesn't. But this is just the concept of the market. During this January, because there's less of volume, you may not really see the play out. And even December, there was less of volume. But what happened? Look at this right now. This is really the key. What timeline was this? This was Tuesday, December. This was around December. What happened during Tokyo? It accumulated. All right. So this is Tokyo high. Okay. This is Tokyo low. What happened? First thing market did was break. This was a manipulation. And what was the next thing it did? It distributed and it took away the Tokyo low. Are you guys seeing this? All right. And the next thing is what? It retested it and it dropped. Okay. So it's either a retest of it or sometimes it will come into the phase. Okay. You look out for a fair value gap. You always look out for a fair value gap. So why did we take this area? It was a fair value gap between this candle and this candle. And what happened to the market? The moment it broke, boom, it came to the fair value gap, which also happened to be what? The previous low. Okay. And what happened? It distributed. So if you are taking this trade, the next question will be, Kenry, where would be the risk of the market? Sometimes scalpers or people who are risk traders, they love to take it, the candle after the fair value gap, or they just put it on the Asian. The strategy is put it on the Asian. Wait, guys, how long have I been out? How long have I been out? I know the network is for like 2 minutes. What was the last thing I was saying before you guys, because you realize that I was not seeing anybody. Did you guys see when I was talking about this? This is what I was talking about before it went. Do you guys see that? You, okay, good. Okay, I was talking about what type of, okay, good. So it wasn't long. All right, so I talked about, you can see this fit in the face. So there was a fitting very well. Let's check out some things we are using right now. Okay, so first, this is what I was talking about, right? So first, there was a manipulation on the London session, and the market expanded, okay, taking away the low, Tokyo low. And what happened? Okay, there was a fair value gap. I'm on a 15-minute now, right? Hold on, guys. I think this is where I was. Okay, but this is another example. Okay, so there was a consolidation into what? The Tokyo session, it hit the low. Okay, what happened to London? London manipulated because this was the Tokyo high. Are you guys following? London manipulated first, and guess what? Distributed down, taking away the Tokyo low. All right. And what happened after? It came back to retest. So always after the, if you look here right now, there is a fair value gap between this area, all right, and this area. This candle and this candle, and that is literally over the next couple of candles. He did it, all right, took it, and also the Tokyo low, boom, dropped down. But that was a little bit rough, but I love this one. Okay, so Tokyo consolidated. You could see the proof of price moving sideways. Okay, and it also consolidated because this is also Tokyo, because Sydney and there's a part of this that is also Tokyo based on the timeline. Sydney and Tokyo session. So guess what happened? London manipulated and expanded, taking away the floor, all right, of the Tokyo. And what happened next? It came back into a fair value gap and distributed. So I was talking about the stop loss before the network So choosing a stop loss is based on your risk appetite of the day. What's your risk plan? I dropped so many things. So most people, daring traders, they put their stop loss after the fair value gap. I don't like that. I'm not of that fair value gap. Some put their stop loss the candle after the gap. So this is the candle, okay, of the momentum. So they put it there after that. This is just to reduce risk to get more reward, okay? But based off on the strategy, when you take a sell on an accumulation, you put the stop loss above the Tokyo high, okay? Then you target 1 to 2. So this is 1 to 2, which was this around 1 to 2, which was perfect, okay? Does this make sense? TP1, 1 to 1, TP2, 1 to 2. Does this make sense? Put sense in the chat. Okay. So it doesn't always happen like, oh, I must manipulate. But when you see it, okay, when you see it, you guys are not responding to me. Is it because of network? Am I frozen again? Okay, this is what you do when you see it. Something around this area again. Look, what happened here? Market consolidated on Asian session. Okay, the first thing market did was it tried to manipulate on this side, it didn't. But guess what? It manipulated on this side, all right, and expanded. Does that make sense? Now look at what happened after. So even all what happened here is actually an activation of what was supposed to happen here. Because when you look at this, there's a fair value gap. So there's a fair value gap between this area and this candle. What did the market do? Okay, boom. So this was a fair value gap between this candle, 3 candles down here. All right. This market broke out, came back all. It's still in the fair value gap. So this market is actually all a consolidation on a trade before it happened here. But now it went into another session to actually play it out again. So this is also an expansion and distribution, but that distribution consolidated. So this is one of the things you just want to watch out for. It doesn't always happen. Listen, it doesn't always happen that it will. Sorry, let me put it. It will manipulate. So you don't have a conflict of, because sometimes it's the conflict of strategy. You're learning a particular thing, okay, and the next thing is one other new thing is disturbing you. No, okay. There is what I call price action. Whenever a market consolidates, it's creating volume. A breakout may be the move. Okay, a breakout and a retest is actually a trading strategy. But what you just do with this is you use it as an extra confirmation within the time session. So if Tokyo consolidated, you want to watch out for London manipulating. What that means is this fast, okay, let me get a entry. You want to be, it makes you more patient and observant. The more observant you are in the market, the more you make money and the less you lose money. All right. So observe, Tokyo session consolidate, London session tends to manipulate and also create an expansion phase for New York session where there's going to be distribution. So New York session in the market most of the time distribute, okay? London session manipulate or set the cost of what distribution for New York session. So this is something to just help you guys know, okay, how to fit it around session. But apart from session, Kenry, can I use it as a loan strategy? Absolutely, yes. Whenever the market consolidates, okay? Whenever the market consolidates, look out for, yeah. So you can take a screenshot of this. Whenever the market accumulates, which is consolidate, look out for a manipulation. It tends to happen. So even if you took the market, all right, and it retested, you took it for a buy, put your stop loss for price action. That's a break and a retest. You use it for a higher time frame. But for a lower time frame, this is good on 15 minutes. This strategy I'm showing you right now is good for 15 minutes. Okay. So let's say, oh, I was using price action. I took a break and a retest. It means it broke, it retested. All right. And it opened a new candle. It means I can put my stop loss below here and I'll take the trade. But let's say that the trade now came back. What you're not looking for is you want to now look out for what? The break of the structure that automatically fits it into the strategy. Okay. You want to wait for a retest, the fair value gap, look at for a fair value gap within, mostly when this candle is a momentum or the candles preceding this move is a momentum, you see momentum, just look out for a gap. Whenever the market breaks, come back into that gap, take that trade and put the stop loss above, okay? Now, this is not going to be the Asian high or the Asian low, because why? It is not an Asian, this thing is not a strategy, loan strategy. So you put it above, okay, the high that was created on the manipulation. Does this make sense? Any question on this? The other one is quite very, very simple. Very simple one, okay? Very simple one. Did you guys get this? The AMD concept. If you got it, put AMD on the chat. So if you look at Euro USD right now, okay, if this is not manipulation, so this is Tokyo session. So this normally before, this has not broken out of Tokyo session. So this is still within the consolidation phase if I'm looking at it, because this didn't break out of it has to break out of the Tokyo session. Okay. So you guys are not answering me. Is this still the network? Am I still lagging? Hold on. This is 10 o'clock. Tokyo, this is showing Tokyo ended at, this is 10 o'clock. This is showing Tokyo ended at 10 o'clock. Tokyo was supposed to end at, I'm in the settings. I think it's always good to pay attention to the market. Always good to pay attention to your trading. So impute. Tokyo is supposed to end at it's 8 o'clock. Yeah, 9. Let me see this. 8:45 now. Okay, London starts at, is there a 1 hour difference? What time? UTC. Are we on UTC? What timeline are we right now? Okay, let me put it on. Are we same timeline with London? This is Lagos now. Okay, Lagos is UTC +1. This is correct. Which automatically makes it this. Yeah. So London starts at, you guys could just take a screenshot of this. It could help you after I'm done. So London starts at, supposed to be, Nigerian time is supposed to be, is it 8 o'clock? If we're not in D time, okay. The London session is 8 o'clock, 8 a.m. 8 a.m. to, so I'll just leave it to 1. That's okay. So let me see this now. Okay, so this is London. This was 9 o'clock. I think there's a different, there's an hour difference on, it's 9:15. There's an hour difference on TradingView. This is Lagos now, 9 o'clock. But London is supposed to start at, okay, the session sheet on 9 a.m. On D, that's on D. We're not on D time saving. So London is supposed to start at 8 o'clock. So this was supposed to be the start of London. I said to push it back. I put it at 8 a.m. Yes, okay. I believe that was why it was on 7. There's a difference on TradingView. Okay. So let me. Okay, good. So this was the start of London. All right. I hope you guys got it. So this was the start of London. It didn't manipulate, take away the Tokyo. So this is the this may be, so London tends to manipulate. So this may be a manipulation. Okay, so you want to watch out the cost of London, what it's going to do, if it's going to cause an expansion for distribution. The moment this market takes this low away, you want to watch out for a trade. Okay, you want to look out for a trade the moment it takes that away. Okay, because this may be London manipulating. Okay, Tokyo consolidated quite well. All right. So this was Tokyo low, this was Tokyo high. So this is London. You can see that London has expanded, manipulated. Okay, so I want to watch out for the next couple of candle play outs. All right. So I'm just going to watch out for that. So this strategy is falling within the Tokyo session. So the Tokyo high, Tokyo low. Okay. The market takes, if London session expand, and the strategy can also be this way, can be interpreted this way. Because of this, I was supposed to add setup on this, but let me use this another chart. The strategy can also be interpreted this way. Okay, Tokyo. Okay, so this is Tokyo, the high and the low of Tokyo. Okay, any breakout. London, watch out for breakout on London. Watch out for manipulation on London, okay? All right. So for a buy, I would watch out for a manipulation on Tokyo low, okay, and a distribution. So that is what it could be. You could not use it as this, all right? Kendra, what does that mean? So if this was Tokyo, I'll watch out for a manipulation. All right, but this didn't manipulate, this just continued distribution. So that's another way you want to watch out if you want to trade this particular strategy. So this is London. So London took away Tokyo low. All right. Say, boss, please check out GBP USD. No, I already checked that. I'll come back to that. Let me finish on this. Okay. So that you guys can spot what's happening. So Tokyo has kept this. So you could use it as Tokyo, just as accumulation Tokyo, but you could use it independently. Okay. Over the course of next week, I'll be giving you guys different variation on how this would fit into our trade execution. But this is just to introduce the concept, okay, that when market consolidates, it will tend to manipulate, then it will expand. All right. And that could give us what? Our strategy to trade on every day within the market. So the other one is very, very simple. That's why I took our time on this expansion. It's still based on the London opening. Okay. So at the first 15-minute candle on an opening, the first 15-minute candle. Okay. So this is the first 15-minute candle. I think we are a week here. All right. So this is first 15-minute candle on an opening, London opening, okay? If the market breaks above, very simple strategy, dangerous, sleep simple. If the market breaks above, you buy. The first 15-minute candle, the market breaks above, okay? So it's called the drum, the opening drum, okay? If it breaks above, you buy. Put your stop loss below the Tokyo low, okay? Go check that out. So this is the first. So this manipulation took this out. So this is the first 15 minutes. Okay, so this was a breakout. It means you would have entered a trade. This was a breakout. Okay, it means you would have entered a trade, put a stop loss here, and do a 1-to-1. Okay, so if I was selling here, so this was a breakout. Okay, this would have been a little bit shallow anyway. Okay, this didn't do a 1-to-1. It means you'd have been taken out. All right, you'd have been taken out. Didn't get to 1-to-1. It only did this. This is not up to 1-to-1. It's 1-to-6. So this was a lesson. All right, because it comes back to take you out. Now let's go back to beautiful, another one. So I'm gonna do 10. Let's see how you guys rate it. So this first London, except I'm missing this timeline, but I believe this timeline is okay. So this was an opening, this was a breakout. It means you'd have entered here 1-to-1. Okay, you put it above this. Okay, so 1-to-1 would be, this is a 1-to-1 strategy. Don't be too greedy, because you could use 1-to-2. Then if you have automatic trailing, you trail it. Okay, you could use 1-to-2. There's no strategy you can't use 1-to-2, but it's always good 1-to-1. It means TP1 you would have taken this, but you can use 1-to-2. Let's just do it for 1-to-2. Let's see how it goes. All right, so this is 1-to-2. So this was a TP. Okay, so let's go to another opening. This was the London opening. This was the breakout. So it means if I took this trade, I'm sure I got 1-to-1. Okay, you could test it within 100 trades. I'll give you guys that assignment. It means if I took this trade 1-to-1, oh boy, I did get a 1-on-1. Yeah. So if I took this trade, I did get a 1-on-1. So this is 2-1, right? So we'll do 10. Let's see how it goes. Okay, this was the first candle, first 15-minute candle on. I know you guys are already seeing that this is a dangerous strategy, right? Put 5 on the chart if you guys already see that. It's simple. It's very simple. It's for rookies. Okay. So this is a breakout. This is entry. So 1-to-1. Oh man, this game. This is closing. You can see this is just 11 pips. And this is 1-to-2. So you got 1-to-2. Okay. So let's do another opening. So that's 3-1, right? I don't know if you're finding this interesting. Where's the week? Sometimes I don't see where the week lies. Yeah, this one is here, but I really don't. Okay, yeah, this one is here. Okay, this is the candle that broke above. It means this is your buy. 1-to-1. So this is your low. And this is your 1-to-1. Okay, this actually even did 1-to-2. I believe 1-to-2. Yeah, 1-to-2. Okay, so that is what? How many trades now? How many trades now? Are you guys following? Are you guys paying attention? Or you are caught up in, oh, you're seeing. I think I'm up here now. 4-1. That's 5 trades. Okay. Now let's look at this one. Okay. So this is the first candle. Where is the week? Okay, good. So this is the week. This is, yeah. Was there a break above? No. So this was the first break below. Okay, so that would be an entry for a short. Boom. Stop loss above that high. Boom. Okay, and it was supposed to be. I don't know if I'm really seeing this thing well, but you can actually put it above this high. But normally it was supposed to stay here. Okay, so if I entered here, 1-to-1 would be, this is 1-to-1. But I would have been taken out if I'm using this. If I'm using the stop loss, I'd have been taken out because taken out. No, it would have, well, it depends on the broker. This would have been a threat. That is if I'm using this. But if I'm using this was fine. So this is 1-to, okay? It's just 1-to. I didn't get there. So what do we call this one? That is, it depends which. So this was how many pips? It depends which this. I don't want to compromise the value of the trade. It is what it is. It would have been a lesson. That's 4-2. But it actually distributed down very well. So it depends on the broker you're using, because this is where you got in on the trade. This is the week. I don't know if this was going to take you out. So I don't know if this is going to take you out. Okay, depending on what you selected. Okay, or where you choose. But this moved down after the breakout. The whole idea is not your trade. The whole idea is what did he do after the breakout? So this distributed down after the first breakout. Okay, so I'm going to just leave this one even. What do you guys think? Your choice. All right, it could be a lesson, it could be an even. So this is the first candle. If I get to 10, you guys let me know. This is the first candle. This is the week. This is the breakout. It means this would have been an entry. Very dangerously sweet strategy. Okay. So 1-to-1 would have been So let's see if we go 1 to 2. Yeah, we got 1 to 2 on the market. So that's one. So let's look at this. This is the next one. So this thing actually helps if you're using this London strategy, that the session breakout, you could use this. So the first candle was a sell candle, and we had the wick here. There was no breakout on the upside. The first breakout was this. So this was the entry. This have been the entry. Boom. And the stop loss would have been, I tend to always, if you find the stop loss above if the stop loss is close to the Asian high, I would advise you use the Asian high. Okay, so that's about 8 pips stop loss. And guess what? Did we get a 1 to 2? Let's see. We didn't get a 1 to 2, but we got a 1 on 1. All right, so that's another one neutral. Beautiful. How many now? How many trades now? So this was boom. So this was a lesson. I don't even have to do it. The first candle was a sell. This was a close. This was a lesson. I don't need to do it. That's a lesson. It means we are taking this trade. All right. But guess what? I'm not going to say this now because that is another one. So the first candle was, so let's see this one. If we get, I'm not sure we got a 1 on 1. So you want to, another thing to do, Kenry, which is also what I would want you guys to do. Yes, this candle, I think it's somewhere here. I think I got it. Yeah, it's somewhere here. So this candle was actually a break, but there was no 1 to 1. So this, what am I doing? I think I'm doing the wrong thing. Sorry, guys. I'm doing this is the first candle. Yeah. So this candle broke. It's already a lesson. This didn't give us. Okay. So what have you noticed so far? Because while I am doing back testing, I'm also noticing something. Okay. So this was the first candle. On this one, pump. I don't know if this candle did not have the wick here. This was the first breakout, but I'm not sure we got a 1 to 1. Where is my? No 1 to 1. You didn't get it. Took that out. So this was just no 1 to 1. So that's a lesson. Now, okay, the next one would be this. This obviously a win. So I don't even have to do it because of time. Okay, this obviously a win. This was a candle broke below. Okay, and it was a win. How many now? Okay, I think it's just remaining 1. Okay, so this was a close. This was a close above, and this is also a win because why it didn't come back down. Okay, so this was the first candle. This was a close up. This was a close above this area, and that gave a 1 to 2. All right. So this type of candle don't there. Okay, I'll tell you. This is the first candle. When you have a momentum candle, all right, this broke above, but you will not get it. When you have candles like this, don't even dare. Okay, I'm stating that now outright. How many did we get so far? Okay, what are the trades so far? So I believe we got 3, right? We got 3 lessons. This is how you do. You could do it to 100, see the results. Do it to 100. The more you get more confirmation, the more you get more confidence. Every London, the first 15 minutes of the candle opening, whatsoever it is, you mark that candle, the full candle out. If it breaks out of any of the, very simple, one of the simplest strategies I came across recently. Crazy. If you observe the market long enough, you're going to find opportunities. It's as simple as that. You could go on and on and on and on. You will find that most of the time, the first candle, okay, boom, break below 1 to 2. All right, this was a good one. Okay, this was the first candle. It broke below. All right. Yeah, this broke below. Made sense. It's not that the first candle is a buy, then you continue buying. No, the first candle, you mark it out. Okay. So this was the first candle. It came here. This was a break above. So this one break above, you'd have taken it for a buy, but you'd have lost it. All right. Now, this is, have you guys gotten this? Something else I want to tell you guys. Quite unique. It's good for, the reason I said it's good for intraday traders, and I'm also going to give you guys an assignment. So A3, was that a win? Okay. So it would have been 8-2 because I added another one, because the last one I think I added was a lesson. All right. What is that? How many of you, what do you guys think? You guys talk to me. What do you guys think about this? Is this something you want to practice? Is it easy? Let me know. All right. Is this easy? Give me your feedback. And is it easy? I told you guys this year, we're going to do amazing things in trading. Okay. Is it easy? Ah, man, I feel like I'm struggling with you guys. Yeah, practice it on them. Before you practice, do 100 back test. Find a pair, do 100. No, this is what I'll let you guys know. Find different pairs, do 20, 20, 20, get the result, write it on a note sheet. See the pairs that have more win accuracy, okay? Then you do a deep analysis. There's actually a tool used to do, but I like to do my back test like I'm seeing the market. So what did I notice while I was doing this back test? All right. I know you guys don't pay attention. You just want to see results. But me, I pay attention to things, detail. So the ones we had lessons, you find out that when the market is consolidating, okay, the times we had lessons, the market was still consolidating. You guys noticed? All right. I wish I would have put the one that I had lesson, I would have tagged them. The ones who had lesson, the market was still consolidating. If the market still is consolidating, you'll find challenges. Okay, because why? Consolidation means it's going up and down. But the moment market peaks momentum, like this, when the market started, immediately peak momentum. All right. When the market started, okay, this one didn't actually peak momentum immediately, consolidated for a while. But when it did that breakout here, it sold. Okay. So, but the ones that you're going to be caught up, markets may just be consolidating. Does this make sense? Have I given you guys a good strategy for next week to practice to trade? Any questions so far? All right. My time is almost running up. You said I should check GU. We already bought GU yesterday, DJ Ranking. And the GU was the first trade I actually analyzed when I came in. What do you want me to check on GU? So Kendry, if we're using this as a yardstick, you should have bought GU. Okay? You'd have bought GU, and I believe GU now is almost going to be 1-to-1. The thing is, this is a trade. It's almost like binary option. You almost hit so this was the first candle, okay? And this broke above. All right? So this would have been an entry. Pop. Okay? So you could use it. You could look it in. Let's just look at another. All right. So we're looking at this right now. So USDJPY would have given us a lesson, okay, because this was the first candle. Okay, this broke, but I guess it was because of this news. So this would have been a lesson. I don't think something about me is telling me this. It may not be good on JPY pairs. So this was the first candle. This didn't break above. This broke below. Immediately came to. I'm not sure. I'm confident about this guy. This was the first candle. Okay, this broke above and gave us a win. All right. Shegun, the strategy is amazing. Okay, so where is London again? Okay, so this was London. No, this is not the MD. This is the drum strategy. So this was a break below. This would have given us a 1-to-1. Just try it out on every pair, you know. Okay, try that. The most important thing, try. But I believe it's good on Euro, USD pairs. Like I'm not too sure about JPY pairs. I've not done my retest on my back testing on that one, but I do believe it's going to be How do we mark the sessions? All right, beautiful. Just come on, go to indicator, all right, and select market session by Leviathan. Okay. Market sessions, market. Are you guys see here, man? Network. So it means for you to trade this strategy, you have to be present in the market the first 15 minutes, which is going to be 8:45. You want to see that's the first 15 minutes into the market. You want to see that. Can you guys hear me? I don't know if the network has tripped me off. Man, I think this strategy may turn out well for you guys. We'll keep you add it as your intraday. I'm doing this for those who like to trade all the time in the market. So first thing in the morning, you could use this. Record your the moment you backtest it is good. Now begin to trade it on your demo account. All right. By the time you have a success 20 trades on your demo account and your wins were better, boom, you go live with it, starting from small risk. Now this is loading. Can you guys hear me? I'm struggling. I'm really struggling, fam. Can you guys hear me? Let me know in the chat. I'm struggling with the network today. You guys are tracking, right? Okay, beautiful. So what was the instruction that I gave now? Who can tell me the instruction that I gave now? DJ ranking. What was the instruction that I gave now? I think I made you hold on. Where is my okay? Let me give you guys mic access. I want to know if you guys got the instruction. What was the instruction that I gave now? You can speak it out. That's not the only thing I said, though. You guys should pay attention to instruction. Teaching is powerful, but instruction is key. Okay? Instruction is key. Yes, I like that. So I gave you guys an instruction. You write it down. So the first thing you want to do is before you trade it on a demo account, back test different currencies, 20 trades each. So you can know because you don't want to be wasting, thinking, oh, everything you now want to trade it on any pair. You'll be disappointed. Okay. So find the pairs. I already have a feeling that USD pairs, okay, JPY pair. I already have a feeling that JPY pairs are not going to be as consistent as GU, EU, NU, AU, all those pairs. So, but it's a feeling. The reason I'm using a feeling is because I've not back tested it. I've back tested EU. I played more on EU and GU, and it's quite interesting. So I'm not even back tested it on gold. I'm going to back test it on gold. If I see it on gold, then I think I will just leave everything. Gold, it is. Here we go this year. All right. We go gold premium this year. So I'm going to do that. But I need you guys to do backtest it on at least four pairs, maybe different pairs. See how it works. You don't have to do AU, EU, NU. You could just pick one of them or two of them because they all move alike. Pick JPY pair, pick a card pair, pick an CHF pair. Just do it on 20 trades each. You can do that within 2 hours, less than an hour. Just backtest 20, keep it right down. Backtest, I just did it here right now. Okay, you don't have to wait. Then when you see the result, okay, you find the pair that did well. Now you can on that pair do more. You can do 50 or do 100. Within an hour session, I believe you can do 100 trades. Okay, get your result. If you stand way above 80% or you stand the chance of 80%, you got yourself a trading strategy that you can trade every first 15 minutes of the day. Boom. That's how you get to make money. You don't need me for that. You could literally just get this and you're done. You exit this space. I'm a mentor. All right. So it's easy. Trading is easy, but if we keep trying to find ourselves the strategy that works for us. Okay. I'm really new here. Where are we to do back test? Take it easy. If you don't even understand the message of back testing, just take it easy. All right. Start step by step. Click on the link on my bio. Okay. Click on the link on the Telegram channel. Go through the video, the approach. In fact, just go on Monday. That approach to Forex. First, start that. Give yourself an awareness first about trading. Do you have a trading platform? Do you have TradingView? You don't have TradingView, set it up. I think I put the link on the. It's in one of those videos. Then watch our psychology. See the videos links I put on top of the entrance when you enter the Telegram group. They are very important for everybody who's new. Psychological, risk management, everything you need to know, you need, okay? Come around, they are there. So go over them, familiarize yourself with the vocabularies, the opportunities of the information we're giving so far, then you begin to understand us. Don't force yourself to try to understand so far. Starting time zone of London session with respect to Nigerian time is 9 o'clock. It's 8 o'clock. All right. 8 to 9. I think I'm really, I don't know if the information changes, but what I do know, okay, London session is 8 a.m. to 4 p.m. So when you put 8 a.m. on TradingView, it gives you 9 a.m., but it's the same thing. So it means you have to, it's 8 a.m. But on TradingView is 9 a.m. Just like we're seeing here right now. So you could use the one I use or use the one you back test. So if you back test anyone, look like right now, this is actually, yeah, boy, how are you? This is 8 a.m. Okay, I think I corrected it right now. This is 8 a.m. But it's 7 a.m. on the 13th. Okay. So London session is 8 a.m. So to get 8 a.m., you have to put it on 7 a.m. on the settings. Okay, so 7 a.m. I think by default, that's how it is. By default, when you do it, by default, that's how it is. I think the only thing you might change, did I change anything? I think it's 13. I didn't change anything. Yeah. Just do it. Okay. So that gives you your formation. Any question? If I leave you guys right now, I'm going to test it on gold. But gold, any pair that has momentum, I'm sure, okay? Any pair that has momentum, too much momentum, it may not be too good. I'm going to check it on Euro AUD. Okay, Euro AUD is almost like a gold pair. Any pair that has too much momentum may not be too good. Okay, so let's see this right. It will hit you quickly. This was a breakout. This currently, it got here. It got here. So this was the first breakout. This would have been your trade, and then you got it quickly. Just imagine the first 1 hour of your trade, you hit your TP, you are out. So look at this. This was a breakout. This was the first trade. This was a break low. Okay, so this was a TP because why I didn't break above. Let me see. Where is this? That hit stop loss. Yeah, that hit stop loss. So I don't know about gold, but I'm going to do, before I even trade gold, I'm going to do 50. I'll see the results. That's before I trade gold, but it will work good. So let's test on gold together. You want us to do that? That's what I was doing. Okay. I think I've done 3 now. 1 lesson. This is a lesson, right? Let's check today. Today was a lesson. No, today. This is the first opening. Yeah, today was a lesson. Am I correct? Yeah, it's a lesson. Today is a lesson. This was the first opening. This was a profit. That's 1-1. This wasn't a profit. Was it a profit? I'm not sure it's a profit. No, it's not a profit. This was a lesson. That is 1-2. I told you this type of, okay, this is a candle. This is a lesson. Good as momentum. This was a lesson because it broke below. Okay. So I don't know if I should be telling you guys. So this is 1-3 on gold. So this is the first candle. It broke below. That would have given us a win because this, let's see, did that give us a win? Okay, give us a win. This broke below. Yeah, this broke below. This one broke below. So this was a win. That's 2-3. Avoid candles like this. Like I said, avoid momentum candles. Only take the candles that are this. Okay. So this didn't break. None of this broke. This is tricky. This broke below. I can't really see the line. Okay, it's actually, I'm sure when I put it, it's showing the price. It shows the price somewhere. Somewhere. Where do we see? Okay. There is somewhere we normally see the price, whatever. That would be. So that's the opening. But this is it. This one opened below. So that would have been a, it opened below. Wait. If this one opened below and the stop loss was here. No, it's not a lesson. Kenry, be careful. Stop discarding trade the way you like. That's not the lesson. This was a stop loss. This was a profit, I guess. Yes, so the profit. It wicked the profit. So that is 3-3, right? This is the first one broke above. That's a profit, 4-3. This was the first one broke below. That's a profit, 5-3. This was a break below, 6-3. I don't have to mark it. I'm seeing this one, the break below, 6-3. So this is can you see this market is a consolidation? These are the type of market I tell you. Although you wouldn't know, okay, but your chances are your trade will struggle. So this was a break below. So this was a lesson. That's 5-4, right? This was a lesson. No, this is not a lesson. No, it's not a lesson. Okay, so this was the first, because this one, the wick came up here. And this one was, sometimes because of this dotted line, you don't really see the, okay, this one is here. So this was a break below. It's a win. Okay. How many now? Yeah, 7-4, right? This was a break below, clear win. 8-4. Good wants to consolidation. It's sure you don't get it. So this was a high. This was the high. I don't know where this one closed. I think there's a flat bottom. I think this looks like, okay, yeah, it's here. So this was the first candle that broke below this area was this candle. Are you sure I'm picking the right place? I don't want to assume. Sometimes this thing is this a flat? This look like a flat bottom. I will find a way to know this, except I would, let me see this right now. There's a way I can actually know this. There's a way I can, there's somewhere it shows the price of the candle, where it started, where it closed. This candle is looking like the wick still came down. Or it's either it's a flat bottom or not. So let me do something. I will do something now. Okay, I think I know how I would know now. So just hide it, you will see it. Okay, so yeah, I think I got you. You guys saw it now, right? Bring it back. Beautiful. So let's look at this. This was the first candle that broke below. No assumption. It was a lesson. All right. I think I've gotten my, have I gotten my 10? It was 8-4 before. This is 8-5. This is not good. Good on 10 is not good. This was a break above 9-5. Okay. I've actually done more than 10 trades. I'm actually doing to get to 10. So I think gold wasn't good though. For 10 trades, I think it was the first was 4-3, 5-3, 6-3, then 6-4, 6-4. Yeah, though you would have a win, okay, but it will just be a slight win. And now there is still another factor of the pips that are connected to the loss. Now some pips may be higher, so there's a factor of the pips. But the good thing about the opening of the candle is there is less momentum. So the stop loss are always very minimal. You can see that all of the stop loss we're picking so far, none of them are up to 20 pips. None of them. Some are even 8 pips, some are even 7 pips, some are 5 pips. Okay. So that is the beauty of this type of strategy. You get to limit your risk. Now, there's another flip side to it, but I need you guys to go find out for yourself. So let's say it is valid for both buy and sell. A buy may take you out, but eventually come break the same 15 candle for a sell. As long as it breaks with your stop loss above. You guys go what I just said right now. So if you miss the buy, if the buy takes you out, if you missed it, because the market will definitely move one direction in a London session, except it is consolidating. So let's say if it manipulates, it's going to what? Expand. So manipulation, you took it on manipulation, it means it will hit you. But expansion, you take it again, just like we're trading our German 30. All right. It is very, very important. Wait. Any questions so far? So it was a beautiful session. I know you guys got a new one.